Detached home sales did something different this month that honestly shouldn't have happened, at least not in this market. October in Edmonton should have slowed down. It almost always does, but detached homes didn't get the memo. Absorption rates jumped from 27% to almost 32%. Inventory levels dropped over 9%, and sales actually went up 6% month over month. That almost never happens in October. Meanwhile, semis, townhomes, and apartments all slipped further into buyer's market territory. So now we've got a split market, one segment rallying and three segments cooling. Today, I'm breaking down exactly what shifted, why detached is acting differently, and what it means if you're planning to buy or sell heading into winter. The real story this month is detached homes. So once I do a quick overview of the market as a whole, we're going to go deep into the detached home segment. Let's get into it. All right, so the market as a whole in October was sitting at an absorption rate of 28.87%, up slightly from last month. It was at 28.14%. As you'll see later, that's because of the detached home market. Average price as a whole was sitting at $429,103. In terms of inventory, there was 4,978 active listings at the end of October, and there was 1,437 sales. Number of active listings were down 3.45% for the month, but still up substantially from last year, up 33.35% from last year. And the sales were down 0.96% from September and down 17.13% from the same time last year. Now, the average days on market for the total market was sitting at 41 days. So that bumped up one day. It was at 40 days in September. And if we compare it to last year, it was at 38. And right here, you can see the market price distribution. So the most popular price was between 400,000 and 500,000, and then 300,000 to 400,000, and then 500,000 to 600,000, and then 200,000 to 300,000, and then under 200,000. This is the market as a whole, but that's kind of how the prices got distributed. So when we're looking at the market as a whole, I also like to show you the home price index. So the home price index for the composite benchmark price in October was sitting at 403,600. And you can see that compared to the peak of the year was actually in March when it hit 427,800. And it kind of stayed there for a few months and then dipped substantially in the last few months. But we're still up quite a bit from an October 2024 number when it was at $391,800. All right, getting into the fun part, the detached home market. So the absorption rate was sitting at 31.76%. So it did get pushed back into balanced market territory. It had been in buyer's market territory in September when it was at 27.13%. So that's kind of the big story this month. Average price for detached homes was sitting at $543,731. And you can see the number of active listings at the end of October was 2,560, and there had been 813 sales. This is where the inventory is shown to have dropped. So month over month, it was down 9.32% from September. Still up from last year though. It's up 22.96% from October last year. And for sales, that's up 6.14% from September, which was surprising as well. It is still down from last year though. So the sales are down 12.11% from last year. And average days on market was sitting at 39 days versus 38 days the month before. It was also 38 days the year before. Now, in terms of price distribution, most popular price was between 400,000 and 500,000. Second most popular between 500,000 and 600,000. And then both 300,000 to 400,000 and 600,000 to 700,000 are pretty much on par. Those four segments make up the bulk of the market for detached homes. Now, for the home price index, we've got a couple different ones that we can look at for detached homes. We can look at it separately for one story and two stories. So one story is going to include basically bungalows and bi-levels, raised bungalows, stuff like that. So one story single family home benchmark price was sitting at $445,000 in October 2025. You can see that it has come down from the peak, which was also in March 2025 when it was at $473,400. So it is down a fair amount from the peak, but not super steep. It's like gradually going down. And if you compare that to October 2024, it's still up quite a bit because in October 2024, last year was at $409,100. Now, the two-story homes benchmark price looks a little different here. You can see in October 2025, it was sitting at $557,700, whereas in August, that was our peak for the year when it hit $572,100. Looks a lot different here, kind of like peak and just kind of slumping. And it's up quite a bit still from October 2024, a year ago, when it was at $521,100. Big story here was the fact that I mentioned earlier that both inventory dropped and sales went up. So what I wanted to get into here with the detached market is, why is the detached market acting differently? So I'll give you a few reasons here. So reason number one is that basically what I just said, the detached inventory tightened harder than other segments. So it is normal for inventory to start dropping as we get into the fall and winter months, but it tightened a lot more for detached homes than other segments. So the detached inventory dropped over 9%, as I mentioned. The detached absorption rate jumped from 27% to almost 32%, and the sales actually rose 6% month over month. So those factors combined is kind of textbook early market pressure, essentially. Whereas the other market segments, we haven't looked at them all yet, but apartments, townhomes, and semis, they added inventory or saw a slower absorption. So the detached market is the only segment where supply contracted at the same time demand stayed steady and actually increased. That alone kind of explains that 80% of the weird spike in sales and absorption rate for the detached home market. In addition to that, detached buyers are driven by different things than some of the other segments. So they're driven by life events like growing families, relocations, if they just need more space. So they don't really time the market as much as condo buyers and townhome buyers sometimes do. Detached also becomes more attractive when prices soften, even slightly, because the dollar savings are meaningful. So like $8,000 or $12,000 or $15,000. Whereas a condo price drop, it's not as big of a number. So it doesn't really move the needle as much on buyer demand or affordability. So when we were just looking at those benchmark prices for 2-story and 1-story homes, you can see that they're down significantly from the peak this year. The 1-story homes were down from 473 to 445. So that's not quite 30,000, but that's a big enough number to get more people excited and bring them back into the market. 2-story homes went from 572 in the peak to 557. That's also getting into a big enough number to get people excited and bring more people into the market. I'll also mention that there is some fall urgency. So people wanting to get settled before winter, they're wanting possession before Christmas, and they're wanting to kind of avoid moving in -30. That seasonal bump normally shows up across like all segments, but for this last month, it really only showed up in the detached market, whereas everything else kind of stayed sort of steady and just slowed a little bit. That's kind of why it stands out to me. Now, what does this mean for buyers? Basically, what it means is the detached home market is not a screaming buyer's market. Actually, on one of my last videos, I saw someone comment asking if there's too many listings that was causing a softening. And the person said something along the lines of, I kind of agree and disagree. And then they talked about a friend of theirs or something that got into a multiple offer situation and had to kind of aggressively bid on a property to get what they wanted. That doesn't necessarily feel like a buyer's market if you're in that situation. So if you're a buyer expecting deep discounts or big leverage, you're probably not going to get it in the detached home market. Our numbers show that the absorption rate's rising, not falling. Inventory is shrinking, not building, and sales are rising, not stalling, as they often do at this time of year. So detached is the only market in Edmonton right now with some upward momentum. So if you're shopping detached, the window that you thought you might have this winter might be a little bit tighter than you expected. And then the next insight I'll give you on that is that perhaps detached buyers should move earlier, not later. So based on this data, the odds are that November and December stats might stay stable or mildly tighten. And we're going to start seeing a new batch of buyers coming in as early as mid-January. By the time we're in February, that kicks off kind of the early spring momentum. So I would say for the smart buyer, if you're looking at detached, shopping in November, December might actually be better than waiting until February, March, because there's going to be more people entering the market at that time. And if we're already seeing inventory dropping right now and sales going up, if that trend kind of continues, there could be a squeeze that happens by the time we're in mid-February. So if you're out shopping right now, you're going to get softer negotiating conditions. There's going to be less competition, and you're going to find more sellers that are open to terms, but it's really not a collapsing market. Now I'll flip it on the other side of the coin. What does this mean for sellers? For sellers heading into winter, at least. So the first insight is detached sellers are actually in a better position than they think, or they might think. Most sellers usually expect October, November, December, and January to be pretty soft, but the numbers are kind of showing that rising absorption, falling inventory, and increasing in sales this last month kind of means that detached sellers do actually have more leverage right now than some of the headline price numbers might suggest. So I would say price stability is more likely at this point. The good listings are still going to sell, and if this continues, like, the buyers are active earlier than usual. And if you start getting that happening in also November, December, then it usually tees things up for the spring as well. So I would also say if you're a seller, you still shouldn't overprice. You probably don't need to do any panic discounts, and that's important because the detached market looks like it could be moving into an improving situation, but it's not booming. Okay, I'd probably say the best advice is to price realistically, and the market will meet you. Overpricing will still kill your momentum, but fair pricing should perform well. And the last thing I'll say about that is if the November, December, and or January repeats this sort of spike, then the spring could be stronger than expected earlier this year. So in the next 30 to 60 days, if it looks like what it did in October, the spring inventory will probably tighten faster than normal. So I know that was a lot. Let's get into the next segment. I wanted to focus on detached homes, so let's get into the next segment here. By the way, if you're planning to buy or sell this winter and you want data-driven guidance instead of just guesswork, just reach out. I've got my phone number on the screen, or you can go to booktrevornow.com and select a time on my calendar that works for you. All right, let's look at the semi-detached home market. So this is basically half duplexes. Absorption rate was sitting at 29.38%, which dropped a few points from September when it was at 32.57%. So it's right on the cusp, starting to fall into an actual buyer's market, but not a strong one by any means. I would say it's a pretty weak buyer's market in some scenarios, and certain pockets are going to feel a little different than others. Average price was sitting at $430,315. Number of active listings was 480 at the end of October, and there was 141 sales in October. So active listings were down just a little bit, down 0.41% from September, but up 62% from October last year. And the sales were down 10.19% from September. So that's a pretty big contrast compared to the detached homes that were up 6%. So those ones are up 6%, these ones are down over 10%. They were also down 18.02% from the same time last year. Average days on market was sitting at 38 days versus 36 days last month and 31 days in October of last year. A couple more days than last month and about a week longer than the same time last year. You can see the market distribution here. Biggest segment, 400 to 500,000. Almost half of it. Then the next segment would be the 300 to 400,000, and then the 500 to 600,000. So that's how it kind of spreads out. I don't have home price index data for this one, so we'll jump right into row townhouses. So this is mostly going to be the townhouse condo market. That absorption rate was sitting at 28.84%, which also dropped a couple points, or not, barely a point and a half maybe from September when it was at 32.07%. Average price was sitting at $291,856. Active listings, there were 742 active listings and 214 sales that month. The listings are down 2.88% from September, but up 90% from the same time last year. And the sales were down 12.65% from September and down 24.65% from the same time last year. So again, a pretty big contrast compared to the detached home market, with this down closer to 13% in sales, whereas that was up 6% for detached market. Average days on market, 39 days versus 39 days last month, so pretty flat. And it was 35 days same time last year, so 4 days longer on average. Market distribution, you can see pretty neck and neck between 2 to 300K and 3 to 400K. And then you've got, 15% under 200K and almost 12.5% between 4 and 500K, but those are the four kind of buckets that you'll see for pricing for townhouses. So the benchmark price for townhouses in October 2025 was sitting at $279,100. It peaked in March 2025 at $300,000. So we're down just over 20K from the peak this year. If we compare it to October last year, it was at $262,600. So we're still up from the same time last year. So they have come off a fair amount from the peak. That is also a price gap that some people will notice. So it could bring some other people back into the market as well for townhouses. Now we've got the apartment market. That was sitting at an absorption rate of 20%, basically the same as the month before, but down just slightly. It's always been a buyer's market pretty much for the last year. There's a couple times it bumped up a little bit, but barely. Average price was sitting at $191,212. There was 1,345 active listings at the end of the month and 269 sales. sales. Inventory dropped 5.28% from September, but up 18.71% from October last year. And the sales were down 6.27% from last month and down 26.1% from the same time last year. Average days on market got up to 50 days for an apartment versus 47 last month and 45 days the same time last year. And you can see the market distribution here. Over half of it is under 200,000, and the next segment is between 200,000 and 300,000, and then not much between 300,000 and 400,000, and very little in any segment after that. Benchmark price, you can see in October 2025, the benchmark price was sitting at 194,000. This chart shows a peak of 219,900 in June, but I don't really think this actually happened. If you compare October this year to October last year, it was at 190,200 last year, so it's up like not even $4,000. And I basically think it was like that all year. That spike did not happen as far as I'm concerned. I don't know. I think they were just looking at too narrow of data or something, but it's corrected itself and it's back on track to showing barely any move at all. So yeah, that's kind of it for the apartment condo market. So if you're a homeowner and you want a data-backed estimate of your home's value, just reach out and I'll put one together for you. You can reach me at 780-819-5508 or go to booktrevornow.com to select a time that works for you. That's it for the Edmonton housing market update for November 2025. I hope you guys got value out of it, especially that segment diving deeper into the detached home markets. And I just want to repeat, if detached repeats this spike in November and December, that tells us that buyers are coming back earlier than we expected. Here's my question to you guys. Do you think this was a one-off or the start of a shift in the market? Drop a comment and I'll compare your predictions next month when we get the numbers for that update. Hope you guys enjoyed it. I'll see you on the next one.